Okay, it looks like we are live. Good evening for my UK viewers. Good morning, good afternoon for everyone else. Clive should be coming on soon, Clive Thompson. And we're going to talk a little bit about what's going on, what might be going on with the BRICS and an announcement of a new currency or something. We'll have to see, and that's what we're going to cover. The title of the live stream is "The End is Nigh for the Irredeemable Dollar," and that's what not just a dollar, but every currency in the world has been since August 15th, 1971. Yeah, nice to see you all here. If you're watching this recorded, yeah, we really start out in about 10 minutes. I like to come on early and greet everyone. So we've got Mark Robertson from Scotland, Ben Gray. Rudy's doing well, Captain Banana. He's not here right now. We've been out for a walk today. We've been out for about 3 walks. He's doing really well. He's in the garden right now. Christine Masso from Scotland as well. Leo Singh, good morning, Mario from Brisbane, Australia. John Smith from Copenhagen, Denmark. Techno Ganga from India. RJ McShane interrupted the tech terrorists for this. Mitchell Albrecht, Intrinsic Factor, Joseph 56 from Ohio. Hello, Joseph. Michael Salazar says happy Sunday. Scottish Borders, Andrew Brown. Alex Morgan says it's so confused. British prices is or inflation and lengthy, but our relationship with the dollar has been up since May. Why is my gold and silver worth less now? Well, because the fiat currencies take turn. You know, when one goes up, the other goes down, and vice versa. And this is not the first time it happened. I remember when I first started stacking gold in 2002, it didn't do anything in pounds. It was like between 200 and 220 up until 2005-6. It was really frustrating. The pound was really strong, but then all of a sudden it took off. So when I started this channel, I think gold was around 800 pounds. So I think we just need, it's actually a good opportunity if you are able to keep buying some, exchanging fiat pounds for gold, in my opinion. It's just part of the way things go. I think the Bank of England has been getting help from the Fed with swap lines, and that's why the pound is rebounded. But at the end of the day, I think all fiat currencies are going to sink versus gold. Bally Dance Raver, nice to see you. Jeff Logue says was listening to the Hulk talking about slamming Andre. Yeah, I don't watch that. Rainbird, hi, nice to see you. Calais is my love. Eastern Shore of Maryland. Nice to see you too. Mario, every day another issue. Southwest US Dust Bowl. It's interesting because I heard someone called Simon Hunt, and he was on Palisades Radio, and he said there's an 89-year cycle, like weather cycle, and the last time 89 years ago you had the Dust Bowl. So he thinks food prices are going to go up a lot. So who knows? Got my Monaco 64 mug, a bit of coffee. Jiddu the Voice from the Netherlands. We got ASDF from the Shetland Islands. Says thank you for everything you do. You're welcome. Urban Sombrero, did you pause stacking when the price shot up? I try to, whenever I have extra fiat, I try to buy some. It doesn't matter the price, but I didn't buy any when it went above. I think almost went up to 1,600 in pounds. But I did buy some when it was around between 1,550, 1,600 gold. I'm not concerned though at all. Indy, thank you for your super chat. Paul Jensen says thumbs up. Maiden She, hi Mario, do you think the BOE is secretly buying gold? I don't think they're buying gold, no. I think they're selling a lot of gold. They're taking gold from their clients. There's 5,000 tons there from other central banks. And they're probably leasing it to the bullion banks so they can keep selling it for in order to make the pound look better than it really is. Yeah, Joseph, this is one of my, I've had this for a long time. And I have to say, I'm not that happy with Teespring, their products now, because this mug is like 4 or 5 years old and it's still pretty much okay. But the new ones, the draw, the design, they peel very quickly. So I wouldn't be surprised. I don't sell much there. It's just for a bit of fun, the Teespring store. Brady Girding, do you keep track of how many ounces you are stacking? Yes, I do. I do every time, especially with gold. With silver, not so much. Silver, I have a rough idea how much I have. Frank Brown, if you're not concerned, I'm not concerned too. I guess you're talking about the price in pounds. I mean, the other option is just to sell your gold and put it in the bank, or put it in gilts and finance the government so they can keep financing wars and other projects that you might not be. And we're going to look at one of these things today. Oh, we've got Clive coming on. Let me let him in. There he goes. Hey, Clive.
Hello, Mario. Nice to see you.
Nice to see you.
Very well. Thank you for inviting me on your show.
Oh, it's always a pleasure to have you on, and thank you for coming on my show. So I don't know if you saw the title, because there's a lot of talk right now about this BRICS announcement. So the title of the video is "The End is Nigh for the Irredeemable Dollar." And even, if we don't get a new BRICS currency, I think people are tired, so to speak, of, and I'll show you why I think they're tired. Other countries, I mean, this is why they're tired. I'm going to share screen. Maybe you can touch upon it. Let's see, share this here. So this is the U.S. balance of trade, since I think the mid-50s or so. And you can see that prior to Nixon closing the gold window, it always used to be in balance. And now, they've been running deficits for over 50 years. And I think other countries are asking themselves, why do we have to keep financing this, especially when the U.S. is not being nice to a lot of countries. So what's your take on that?
So deficits, running a trade deficit means they're buying more goods from overseas, perhaps China, for example, than they're selling overseas. And that means they're bringing the goods in from overseas, but sending the dollars out. And those dollars, as we know, have been printed over the decades. So we now have a situation where many countries all around the world are holding large quantities of dollars. And with the situation, the financial situation of the US budget, and the debt levels, I think countries and dollar holders are starting to get a bit concerned. So I think the tide has now turned for the dollar. We'll probably see the dollar going down. And of course, we could have a black swan event, which could eventually cause some new system to be come into place to completely replace the dollar very quickly. If I talk about the BRICS gold-backed currency, which is Brazil, Russia, India, China, and South Africa, and potentially another 41 countries have expressed interest in joining it. The gold-backed bit about it is they think that this, or they are proposing this will be gold-backed in terms of being able to do trade settlement. In other words, countries will be able to ship gold from one country to the other to settle trade dispute, to settle trade imbalances. But there's nothing at the moment to say that you or I could hand in our BRICS currency, assuming we ever get one, and get some gold for it. That's not going to happen. And frankly, given that the parties behind it are parties which I don't have a lot of faith in, or some of them I don't have a lot of faith, some I have more, I wouldn't at this moment in time be holding the BRICS currency, because I would say, what if Russia reneges on its promise, or China does, or you never know. So I don't think it's a strong buy for me.
Yeah, no, I agree with you. I wouldn't want to, I mean, even though the Brazilian real has been relatively strong, and the Mexican peso the last couple of years, I think the reason why we look into this and is because it's a challenge to the dollar and the Western currency.
LinkedIn sent a long notification.
Sorry, apologies for that.
That's okay. It's a challenge to the dollar and the other Western currency, because they're going to need less of the dollar and other currencies, and that's going to be make a difference to us, because, and I think you're already seeing it, Clive, with higher interest rates and bond yields, not just in the UK, but even the US now starting to pick up.
Yeah, so since they raised the debt limit in the United States, the yield on US dollar bonds has been rising almost literally every day. It's approaching 5% in the USA on the 2-year bond, and I think it's going to go a lot higher than that. I've heard Jerome Powell, the Federal Reserve Chairman, speak several times, and he is, from my listening to his words, absolutely resolute that they're going to be very, very firm on interest rate. They're going to keep raising the rates. I think he's going hell for leather to raise the rates. They're talking about 2 raises, but my feeling is that they might go a lot further than that, and the market might force them to.
Yeah, and the other thing is, maybe they're not telling us, but he's trying to keep the foreigners like China from they're trying to attract foreigners to keep buying treasuries, so they need higher rates. I just wanted to play this here because this is quite interesting. Let's play this.
Accordingly, I have directed the Secretary of the Treasury to take the action necessary to defend the dollar against the speculators. I have directed Secretary Connolly to suspend temporarily the convertibility of the dollar into gold or other reserve assets, except in amounts and conditions determined to be in the interest of.
So there you go, temporarily. And the other thing I like that's interesting, Clive, is that they always blame the speculators. So, if a currency or a company or a bond is strong, why would speculators go against it?
Well, it's quite interesting listening to Nixon giving his speech there. Back in 1933, when Roosevelt suspended the conversion of gold, or rather dollars into gold by American citizens, which was the first time they stopped the gold convertibility, he used to do something called the fireside chats. And if you read one of those fireside chats shortly around the time he suspended convertibility for Americans, he was basically talking about it's the speculators. They blame it on the speculators always, but of course it wasn't the speculators. It was, and he did admit this, the fact was that the Americans had far more liabilities in gold than they had assets in gold. And that's why they had to suspend the convertibility for Americans and demand all Americans to hand in their gold. And I'm sure many of the Americans did dutifully queue up and hand in their gold, but I'm sure there were some who said, sod this for a lark, I'm not going to do it.
Yeah, I think Silver Doctors, SD Bullion, he's looked into that, and he says that they only handed in like a quarter. And I think, like you said, in the Roaring 20s, the U.S. Credit system inflated a lot. The banks, there's a lot of speculation, and they issued credit without enough gold backing. And I think then there was the collapse of credit and stouts in Europe. And I think ultimately it was the German bank that was a big creditor, and then the American banks had lent to the Germans. So it was like a domino effect. And I think also the first week that he came into power, Roosevelt, and at that time, the president took over in March, not January. He instituted a bank holiday for a week because people were going to the banks to get their money out, which at the time was gold. And I think that was one of the reasons.
And one of the funny things which happened, that bank holiday so scared Americans that the day, sorry, the lights have just gone out. They're coming again. the day.
Are you in Ukraine or in Switzerland? I'm joking.
Well, I'm in Portugal at the moment, but
all right.
They've come back on again. So the day they reopened the banks and the stock exchange after that bank holiday, that holiday had so scared Americans that they wanted to put their money into literally anything. Now, this was before they stopped Americans from earning the gold, but in a way that might have precipitated the demand for gold. But what actually happened on that day, the US stock exchange had its biggest ever one-day rise. That's from even up to today, it's never had such a large rise. I think it was something like 13% on the day. And the reason was quite simple. People said, what happens if I can't get my money out of the bank again? And they went for something else, and the stock market was one of those things. And the other thing they went for was to start withdrawing their gold from the banks, and that's what precipitated bank runs, which then a few months later, a month or so later, caused them to bring in the edict, which said everybody has to hand in their gold.
Yeah, and yeah, that's right. And about the BRICS, because we saw, I think. RT, there was on Twitter this tweet from the Russian embassy, I think it was in Kenya, that the BRICS were going to announce a goldback currency. And then RT said it. And then you look at the news in the West, and no one's talking about it. I mean, I met someone last week, and he asked me, so did you do your live, your video this morning? And I said, yeah. And he said, what did you talk about? I said, about the BRICS. And he said, what's the BRICS? I think a lot of people are not aware. And there are some people like on Twitter, people who are even into gold, who don't believe it. And the reason why I'm covering this is not because I think gold's going to explode higher. It's because it's a huge move in terms of sound money. If half the world moves into a system that's based more on hard assets than credit, but it seems so unreal that that it could be happening, that I'm not even sure, if they're going to announce anything, or if RT and the Russians are just playing around. What's your feeling? I mean, it's been over 50 years that this system has been going on.
Well, obviously we've got the governments of the world living beyond their means, and it's accelerating. If we take the United States as an example, for every $7 they collect in taxes, they're spending 10. And that figure is going to get worse over the decades. And that's their plan, the official plan, to keep spending more than they get in. There will come up, and that's called a budget deficit. So as they spend more than they get in, that means they've got to borrow the difference. So it's a bit like if you are earning 60,000 a year in your salary, but you're spending 90,000 a year, and you're financing the difference with your credit card. Well, every year your credit card balance will get bigger and bigger and bigger. And we're already in the situation where the amount of debt of the United States is many, 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 many times what they collect annually in taxes, to such a point that within a very small number of years, perhaps 10 years or less, the interest they'll be paying on the national debt will exceed the totality of their taxes. And according to the official plan, the interest on the national debt, which they're calculating will only cost them 2.8%. Obviously, that's way too low a figure when you've got interest rates nearly 5%. But according to their official numbers, that interest is going to keep as a percentage of GDP is going to keep rising and rising and rising. So it's not going to get any better by their own numbers, and their own numbers are going to be wrong. They're going to be way too conservative because the government has always spent more than it plans.
Yeah, look, I just talking about the interest on the debt. I saw this tweet from Lawrence Lepard, and this is approaching $1 trillion now. I mean, I remember a few months ago it was just 800 billion. That's the interest on the debt, and interest. I think bond yields are going to start catching up again. So yeah, it's a cocktail for disaster. But I just wanted to show you as well. Janet Yellen, she was in Beijing, and they asked her, someone from Reuters asked her,
Reuters.
Listen to this.
Secretary, the Russian government has announced that it will launch a BRICS currency in August. And I wonder if you had a chance to speak with the Chinese about that effort. You've spoken here and in other venues about not wanting to see any countries being forced to choose sides. This particular move would create essentially a parallel currency to the US as the world's reserve currency. Can you come up in your conversations? And we also talked about the head of the POC. The Chinese government has not yet announced that he will be taking place. Is it your understanding that Pan will take over as central bank governor? Thank you.
So on the currency issue, I just want to reiterate what I've said in the past, which is I think the United States can rest assured that the dollar is going to play the dominant role in international transactions, facilitating international transactions, and serving as a reserve currency in the years ahead. I don't see that role being threatened by any development, including the one that you've mentioned. I've said previously and would reiterate that because of the role of the dollar and its ability to enable us to implement sanctions, there certainly is motivation in countries around the world.
So I'll stop here. I mean, she couldn't even mention BRICS currency. She said what you said, and it's interesting because she was the one who I think it was in 2017. She said that when they're going to normalize the balance sheet from around 4 trillion, I think at the time, or maybe less, she said it was going to be like watching paint dry. So what's your take on her? Is she just in denial, or she's just trying to keep selling treasuries?
Well, she was previously the chairman of the Federal Reserve, and now she's the secretary of the Treasury. So kind of jumping from one side of the fence to the other side of the fence, because they are, the Treasury and the Federal Reserve are two separate entities. So the Treasury is a US government which collects the taxes and pays the bills. The Federal Reserve is the part which buys the government bonds when it wants to borrow money, and prints the money that the government wants to borrow. So she's kind of sat on both sides of the fence. But I think the message from the Federal Reserve at the moment is that they still, at least this is what they are saying, they'd like to shrink the balance sheet. And that means basically if they do what they say, they won't be buying any treasuries. They'll rather be letting the ones they've got run off and slowly shrink the balance sheet. Now, that's fine until let's assume that the public at large, don't have an appetite to buy the debt that the government wants to issue, and the government does.
Sorry, I think you.
An extent. Can you hear me all right, Mario?
Yeah, now it's fine. It's fine now. Yeah.
So the US government does need to issue a very large amount of debt compared with what it issued historically to finance its budget as planned. And that basically means over the next decade or so, the amount of debt held by the public is going to have to double, assuming the Federal Reserve doesn't take very much of it. I mean, the plan is for the Federal Reserve to take a little of it. But the trouble with that is that the public probably won't take that debt except at much higher interest rates. So the way things are planned out, I think that the interest rate on treasuries, on bonds, are going to be a lot higher than they are today. Unless the Federal Reserve does step in, not their plan, but if they do step in, of course, they could buy as many treasuries as they want at whatever price they want, making the interest rates whatever they choose to make it. But it's not the words which are coming out of the Federal Reserve's mouth at the moment. So we'll see. But I think we're in for a large rise in interest rates globally, not just from the United States, but globally as governments the central banks rather reinforce their mandate of trying to control inflation. But I don't think that's going to control inflation because I think the damage is already done. The inflation has been done over the last decades through this massive wave of printing, which is starting to come home now. And I think there's something which is a dilemma for the central banks. Whilst traditionally you raise interest rates to rein in inflation, the other side of the coin is raising interest rates is in itself inflationary in two senses. One, it raises the cost of manufacturing, increasing prices, and two, it increases the velocity of circulation. So I think because interest rates are going up, we're going to see the velocity of circulation go up as people move their money around faster from place to place to get the highest interest rates, and it gets lent out more quickly. And secondly, because manufacturers will be incurring higher interest costs, that will be pushing up prices as well. So I think it's a bit of a dilemma because the traditional approach of raising interest rates to rein in inflation won't be working as well this time around as it did in the Volcker years.
Yeah, and during the Volcker years, there's a lot less debt as well. And prior to Volcker, interest rates weren't kept as low as they were. I mean, it's unprecedented to have rates at zero for like over 10 years. And like you said, the horses have bolted already, and it's too late. There's Gareth Bain is asking a question. Says, Mario, why don't you ever mention Russia pegged gold to oil? 1 gram of gold to a barrel of oil, or 1 gram of gold to 5,000 rubles. Well, I have mentioned that when it came out, and I think I'm not sure if they are pegging 1 gram of gold to a barrel of oil, but I think that's what Zoltan Pozar of Credit Suisse said they could do, and it would drive up the price of gold. But the 1 gram of gold, 5 rubles for a gram of gold, they did that right after a few months after the war started last year in order to stabilize the ruble, and that did stabilize the ruble. So I have spoken about it, but right now, I'm not sure it's that important, but they haven't really, I don't think they have really announced anything to do with, the price of gold, 1 gram of gold being, I guess that would put a peg under the, that means they would be willing to sell, because 1 gram of gold right now, I don't know, it's about, how much is it? $60, $70 about $60.
Yeah, it'd be about 60,
So,
60-ish.
So I guess if, the price of oil is 72 right now, so yeah, they would take a loss, but they would be getting the gold. And I guess people would do that, and that would force people to buy gold so they could get the cheap oil. So yeah, that's how, maybe that's why a lot of the BRICS countries have been buying gold. They bought a lot of gold last year. Have you got any views on that, opinions on that, what he asked, Clive?
Well, that 1 gram of gold equals 1 barrel of oil would be kind of like having a fixed exchange rate. And the trouble with that is sooner or later something breaks. Either you have too much oil, or you have too much gold, you have not enough oil or not enough gold. And the ratio becomes unreasonable as people try to move from one to the other at the fixed rate. Pegs don't work forever. Pegs always break. So I don't think it'll work in the long run. I mean, it might be a short-term fix, but I can't really see it happening.
And I think that was an idea that Zoltan had. He said if they do this, it would drive, there would be a lot of demand for gold. So I'm not sure the Russian government has done that. And just want to say thank to Intrepid Soul for the super chat. He says, great to see you both. Someone said that you look like Michael Caine. He said, Clive could pass for Michael Caine.
Thank you very much. I appreciate the compliment.
You're only supposed to blow the doors off. Do you remember the Italian Job? That was Michael Caine.
Oh, was it? Yes.
That movie. Yeah.
That was the movie where they were. Was that the movie where
that was to do with gold as well, wasn't it?
Yeah, where they had they plated the bottom of the cars with gold bars or something, and drove them across the border to Italy from Switzerland. Is that the one?
On the coach, and the coach drove off the cliff, and the gold was like bringing it down.
I must have watched it 30 or 40 years ago.
Yeah. The thing about I saw a comment on Twitter about the BRICS currency or trade currency. Like you said, you're not going to be able to go to Brazil or Russia or China and use gold coins or silver coins. It's going to be something between their treasuries to settle trade. But the other thing is, well, it takes time to have a single currency. And I don't think the BRICS want a single currency, but look at Europe. They had the European Monetary Union, EMU, and for 10 years they fixed their currencies. And it was only in 1998 that the euro started, and even then there weren't any euro notes or coins. I think it was only 2 or 3 years later in 2001. So yeah.
Well, we mustn't forget that Britain was in the European, in the EMU or EQ or whatever it was, and that worked until the trade balance got so large that Britain was spending all its reserves to try and support the level of the pound to keep it inside the band which they were allowed to keep it in, until finally George Soros took a pot at it and shorted the pound so massively that he beat the Bank of England, and the pound collapsed either 20 or 30% of the day.
I remember that because I came to work in London, and I started the first working day of September after the bank holiday. And a couple of weeks later, the pound dropped from 280 to the Swiss franc to 240. And I had negotiated, because I was working in Geneva at a private bank. And this guy who hired me, we negotiated my salary, and and then, it got cut relative to Switzerland right away. So I always remember that. And I remember the Bank of England raised rates from 10 to 15% in one day, and then they cut it back to 10. It was a big mess. But actually, that was, after that, the economy actually picked up quite nicely all throughout the next few years. Talking about the UK, I have an article here, Clive, and it just goes to show how our taxes are actually been used to help billionaires. And in this case, it's a Chinese billionaire. Taxpayers help bankroll Premier League club owned by Chinese billionaire. And, it makes you wonder what's going on. Chinese billionaire owner of Wolverhampton Wanderers and THG, the struggling online retailer run by Matt Moulding, are among the organizations benefiting from a 6.5 billion tax-backed fund. So what's your feeling about this? I personally think that governments, they're no good at allocating resources, especially when it's not their money.
I hadn't seen that article, but around the world, most governments have some sort of scheme for international firms to come and invest in their own country, which basically says, come and invest in our country and we will ease up on the taxes for you. Obviously, it's not as blatant as that, but there's always schemes and ways and means to encourage foreigners to invest in your country. Now, obviously, that's not really meant to encourage investment in football teams, but it probably comes under the category of investment.
Yeah.
So, but I don't know how they did it and how it worked. I haven't seen the article.
Do the Swiss government? I don't think the Swiss government does that kind of stuff.
Taxes for corporations in Switzerland are pretty low. I think it's around 13%. It's not high. So
yeah, but they don't subsidize them.
No, not to my knowledge.
Yeah. Oh, I wanted to play something else, and for those of you who understand French, you like this. And this problem of the exorbitant privilege that the U.S. has, that's been going on for like as long as I've been around. And this is from, I'm trying to share this, hold on. This is from 1965, and this is really interesting. So let's play this. There we go.
Le fait que beaucoup d'États acceptent par principe des dollars au même titre que de l'or pour les règlements des différences qui existent à leur profit dans la balance des paiements américaine, ce fait entraîne les Américains à s'endetter et à s'endetter gratuitement vis-à-vis de l'étranger, car ce qu'ils lui doivent, ils le lui payent, tout au moins en partie, avec des dollars qu'il ne tient qu'à eux d'émettre. Étant donné les conséquences que pourrait avoir une crise qui surviendrait dans un pareil domaine, nous pensons qu'il faut prendre à temps les moyens de l'éviter. Nous estimons nécessaire que les échanges internationaux soient établis, comme c'était le cas avant les grands malheurs du monde, sur une base monétaire indiscutable et qui ne porte la marque d'aucun pays en particulier. Quelle base? En vérité, on ne voit pas qu'il puisse y avoir réellement de critères, d'étalons autres que l'or.
So there you go. I thought that was interesting, and I think I wouldn't be surprised if the of economists in Russia, China, and other countries haven't watched that and they realized.
Yeah, that was President de Gaulle. I see it was 1965 when he made that speech, and it was obviously he was one of the proponents that France should bring back its gold from America because they knew that America didn't have enough gold to honor its liabilities to the countries around the world. Everyone came calling for the gold, but the Americans didn't have it. Now, I think de Gaulle died before he could actually get the gold back or could actually ask for the gold back, but his successor did then send a battleship into New York or wherever it was to collect the gold. And the Americans then said, look, sorry, boys, you can't have it, because if we give it to you, we'd have to give it to everybody. We haven't got it.
Yeah, the British also, they asked for the gold. And and the French, and they were asking the week before August 15th, and then they just had to close everything down. Nixon, they suspended temporarily, and here we are, almost 52 years later. And it's interesting, Clive, if you go back, and you can find this like in tradingeconomics.com, dollar reserves of countries back in 1971, and you divide it by 35, and countries like Brazil, for example, they're supposed to have like over 2,000 tons, but they've only got like 400 or 300 right now. So the US actually technically owes a lot of countries gold at $35 an ounce, not at 2,000.
Yeah. Obviously, there's not enough. If it was gold that they were going to pay them in, there isn't enough gold to go around. They can't do it.
No. Yeah. So AD, thank you for your super chat. He says, $sign Pepe will save us all. I don't know what that is. I think that's one of these funny cryptos, like a Doge or something. Pepe, have you heard of it?
Isn't that one that Elon Musk jumped on the other day? I kind of heard of it, but yeah. I wouldn't pay any attention to it. I think it's probably rubbish.
I know. Someone's saying, Mario, exchange your pounds for commodities. Yeah, I try to do as much as possible. The other thing, Clive, I'm going to share this here because there's a lot of talk, and I've heard someone on YouTube, an English guy, talking about how electric vehicles are very dangerous. The batteries are really heavy. You're getting a lot of potholes, and if you have an accident, it could burn up. The lithium is very highly reactive. So there's talk now that there's a new, and I think Toyota's working on it. It's a solid state battery, which actually has quite a bit of silver, could have quite a bit of silver. So I thought that was interesting.
Well, it's predicted that the automotive industry will use an awful lot more silver in the decades which follow due to the electrification of cars. I mean, cars are going to have more and more electronics in them, and especially if they become more battery cars than petrol or diesel, the amount of silver in cars will go up anyway. But of course, if they're starting to put silver into batteries, well, that would be quite a huge demand for silver, I imagine.
Yeah.
But, I don't know how near to that, how near to production that is. It looks like it could be decades away before they actually get to do it.
Yeah, I mean, I was reading the Toyota, they've been working on it because, and they said that they could have it in a hybrid by 2027. So yeah, it will take time, and it's very expensive to like develop the technology. But the other thing that's been happening in China, and this guy here, I follow him by Xiao Jun. He follows a lot of the silver, physical silver movements in the Shanghai exchange. And where is it here? Yeah. Operations at the world's second largest silver mine have been suspended. No, but yeah, here we go. He follows a lot of, there's been a lot of physical silver taken out of this Shanghai Futures Exchange. And I think the Chinese are using it a lot for solar panels.
Yeah, it could be solar panels. I mean, I think there was also a rumor that Elon Musk might have done it in connection with his Chinese factory for Teslas, but I have no idea.
Yeah, he was even in China earlier this year, wasn't he? So yeah, speculation. Back to the UK. I saw this article here. UK banks 25 drop adds further investor wildcard. I never heard of this bank. It's like a specialist mortgage lender, OSB, and they're supposed to lend to people who buy to let. So I'm not surprised. I think this last week, Clive, I don't know if you saw the UK Treasury, they sold 2-year gilts, and the yield came out at 5.62, which was the highest yield for any gilt, even long-term gilt this century. And I think on Wednesday this week they're gonna sell 10-year gilts, 3.5 billion. So that would be interesting to see.
So yeah, the yield on UK gilts has been rising. I remember talking on your show a few weeks ago, and the yield was about to on the 2-year was about to go through the 5%, and we discussed that people are buying the 2-year gilt because they are attracted by this relatively high yield compared with the less than 2% they're getting in their bank accounts. But of course, if they'd waited a week or two, they'd now be getting 5.6%.
Yeah, and if they wait another 6 months, they might get, like 6.5.
Yeah. I mean, I think if you're buying if you're investing in gilts, you're buying the very short end. The 2-year, you know what you're getting, and there's not too much to worry about. I mean, the only danger we have is that it could be that the UK pound, the British pound, is the first of the currencies to implode. Sooner or later, one of the G10 currencies is going to implode, and the rest will follow in rapid succession. UK certainly is one of the candidates, which things look precarious for, in my view.
Yeah, I would also say Japan. What do you think of Japan?
Yeah, Japan's a real outlier because they have a target interest rate on the 10-year bond of 0%, and the current yield is about 0.3 or 0.2, something in that range. So people have been buying the 10-year Japanese Treasury hand over fist. Is a JGB, Japanese government bond, is the technical definition. So they'd be buying it, seeing it as a free ride because the government wants to take it to 0%, and that would mean a capital gain for those who buy it. But the other side of the coin, which is where Japan is a bit of an outlier, is their inflation rate is not coming down. It's about 3-point-something%. And the underlying inflation rate is higher than that. They also have, I think they have currently they have a target inflation rate of 0, but they are talking about wanting to take it up to 2% now. But it's a bit weird that Japan has such a low interest rate on its 10-year bond and the other bonds for shorter maturities, when most other countries are raising their rates. Japan's going in the opposite direction. I think that's very bad news for the yen, personally, but it's also going to be very good for Japanese companies because a lower yen means the cost of their exports is, well, not the cost of the exports, the exports that they have will be generating a far higher revenue back in Japan. So actually quite good for their stock market, very good for Japanese companies who are exporters. But not so brilliant for the yen itself.
Yeah, and I mean, I usually look at the yen versus gold, and that's at like an all-time high. It's like at 275,000 yen, and the level now that we have in gold in dollars around 2070. It's like a triple top. The Japanese had that like 6-9 months ago, like a triple top, and then it broke through. I've got something here, Clive, that you were talking about on LinkedIn. I think about it's is it you're talking about Jerome Powell? Was that, what did you say? Yeah, what was the post? That the post about the US budget is an outstanding path, or?
Yeah, so it's perhaps a bit of a conspiracy theory, but it could be true.
Oh yeah, it was that he, oh yeah, explain that to us. Yeah, I couldn't find the post. Now I remember, yeah.
So I'm not at the head of Jerome Powell, but it is possible that, well, let's start with the situation of the Federal Reserve. The Federal Reserve is losing money hand over fist because they're paying out 5% to their depositors, and they're earning 2% on their portfolio of Treasury bonds and mortgage-backed securities. So they're earning less than they're paying out. They're losing billions per week, which means that the capital reserves of the Federal Reserve have been wiped out absolutely in real terms from that alone. On top of that, they've got this absolutely mammoth loss on their portfolio of treasuries. Of course, that's only a paper loss, which if they hold them to maturity over a decade, it'll come good. But the question is, how's the Treasury, how's the Federal Reserve going to get its books back into proper shape? And the way they could do that is to keep raising interest rates. And that's going to hurt more and more in the short run. It's going to make them lose more and more money in the short run. But at a certain point, the interest rate on bonds will be very, very high. Let's say the 10-year yield's gone to over 10%. And don't forget, we're in a situation where the Federal Reserve is tightening. It's not buying treasuries at the moment. But once it gets to 10%, the economy will be in a serious recession, because with high interest rates, that's going to damage the economy. And then the Federal Reserve will say, well, we've got this duty to have full employment, so we better now do our job and buy treasuries. So they're going to buy a bunch of treasuries off the government so the government can stimulate the economy at 10%, meaning the economy starts to get stimulated, and then they can start the Federal Reserve can start lowering the rates, creating a capital gain on those 10-year bonds that they bought. And as they lower the interest rates, they will now have these bonds that they bought when the yields were 10%, but they'll be paying out less and less to the depositors at the Federal Reserve. So their books will come back into balance. Now, that is a bit of a conspiracy theory on my part, but it could, it's something which could work, and it may well be something that Jerome Powell is thinking about, and the Board of Governors of the Federal Reserve are thinking about. So we might well see, on those grounds alone, much higher interest rates in the USA. I think we will anyway for other reasons, but that would be a conspiracy-like reason.
Yeah, I mean, some people have that idea too. I think it's David Hunter. I think he thinks there's going to be a melt up in the stock market and then a crash, and then the Fed will come in and print about 20 trillion in QE, which is huge. How do you think gold and commodities would react in this kind of environment?
Well, that's a great question. And I've given quite a bit of thought to that one. Traditionally, when you raise interest rates, as we are seeing at the moment, it's pretty bad for all assets. The only asset which is good when you raise interest rates historically and normally is cash, because your cash will earn a higher and higher rate. However, once you reach a certain point, that stops being true. And you can take Argentina as an example, where both interest rates and inflation are very high, because at a certain point, people are going to say, yes, I bought this bond yielding 5, 10, 20, 30, 40, 60, 100%, whatever the yield is. But by the time it matures, I've lost 20, 30, 40, 50, 60% of my capital because it doesn't buy as much. So at that point, at some point in the cycle of rising interest rates, we might reach the point where people stop saying, I'm going to sell my hard assets, my gold, I'm going to sell my equities, I'm going to sell my house to invest in cash. And they say, that's a bad exercise, because when those bonds or that cash or those bonds mature, it's not buying me as much. So we could easily get to the point where it turns around and prices, if you take Argentina as a very good example, the price of gold in Argentina has done nothing but go up year after year after year, despite a record, I don't know whether they're record levels, but they're extremely high interest rates in Argentina, along with extremely high inflation. And I think we could easily get that here in Europe and America if we do see these interest rates spiraling out of control. And I think there's a melt up in interest rates, a melt up in the stock market, a melt up in gold. All these are possible scenarios. The way I would play it is I would not personally hold too much cash beyond what I need to spend in the next 6 months, or everyone has got their own time scale. I wouldn't buy bonds at all, and I would hold tangible real assets, accepting that they might be very volatile. They might go down in value if we have a few more interest rate rises, but I don't see that as a certainty, and I'd rather own the tangible asset that I can touch and hold and look at, or an equity where I can earn dividends because equities, they own businesses, they have goodwill, they have property, and they have smart directors who know what they're doing. So I'm quite happy with equities. I'm quite happy with gold and silver. I'm quite happy with property, provided you could buy the right sort of property at the right sort of price. And that's not to say that I don't think we have a major problem in the commercial real estate market at the moment. I think there's a big problem there. But if you can buy the right property at next year's price or the price of the year after, get it cheap enough, I think it'll still be there. It'll still be standing years from now. So my premise, or what I'd like to say to people, is probably the way to play the game is to hold tangible assets, but accept that there's going to be a great deal of volatility in both directions. We don't know which direction will be the next one.
Yeah, I mean, this is what I was talking to you about earlier, the gold and Japanese yen. And you can see that in 2011, or 2013, all-time high here, it was 150,000. And now, I mean, people say, oh, gold hasn't done anything, maybe not in dollars, but it's protected Japanese investors. And we've had like a triple or quadruple top here, but it's keeps going up. And this is the latest one I was telling you about. We had 1, 2, 3, 4 tests, and then eventually it broke out. And I think we're doing the same with the pound, with the euro, the dollar, the Swiss franc, and eventually we go. The Japanese yen, I think, is leading the way in terms of debasement versus gold, and probably because they're keeping interest rates so low, and the BOJ is doing so much QE still.
Well, I think the dollar chart of gold looks pretty much like the last section you've got, except for the spike up after the third circle. So if you just took those last 3 spikes, and I look at the dollar chart of gold, it looks very similar. So we could be about to do what the Japanese price has done, and see a rocket up. I think it's coming sooner or later. It's just a question of when and how.
Yeah, let's have a look. I've got it on another rejecto. This thing keeps popping up. This is from bar chart. Let's take the volume out. Let's do weekly.
Yeah, there's your 3 tops, exactly the same.
Yeah, and if you go back to let's see.
That corresponds with the Japanese top many years ago,
the
2012 to the 30s.
You see the 2011, 2013, we're still around there in dollars, and Japanese yen has already gone up. So I think, it's just a matter of time. It could even do a 4th time comeback as well and still go up. So I think people need to be patient. Do you really want, the other thing I would say, Clive, and this is more personal, but I don't really want to finance the government here, or I wouldn't even want to finance the government anywhere in the world right now, seeing what they're doing, with our taxes. That's another reason to keep a hold of gold, I think.
Yeah, I mean, I think I'm quite happy to pay my taxes and finance government if they do sensible things with it.
Yeah,
like keep
I do
us free of crime and litter and things like that.
I do pay my taxes. What I mean is, aside from paying my taxes, I don't want to buy gilts and finance them like that. So that's what I mean. I'm not telling you they shouldn't. If
you buy gilts, you're just encouraging them to be spendthrifts, because that means that you're encouraging them to borrow money, which means you're encumbering your children to repay those debts, or to suffer a complete default or reset or high inflation.
DJ Jojo, thank you for your super chat. Hello, Mario and Clive. It's very nice to be here listening to you too. Thank you. So why doesn't the Fed revalue gold to current market price?
Okay, I'll answer that one. First of all, I'd like to point out that although you see a gold account on the Federal Reserve's balance sheet, it is not the Federal Reserve's gold. The gold belongs to the US Treasury, the government, And what the Federal Reserve has is a claim on the gold for currency it's issued to the Treasury. So it was not really down to the Federal Reserve to revalue it, because the Federal Reserve can't call it a profit, but the Treasury could. The Treasury could call it a profit and create a few 50 or 60 billion, I don't know how much it would be, out of assets if they were to give that gold to the Federal Reserve, as opposed to having it as a pledge to the Federal Reserve. So if they were to give it to the Federal Reserve and then the Federal Reserve revalued it, we'd have a sudden spike in the amount of money, but it wouldn't really go very far relative to the national debt, and it wouldn't even scratch the surface. What was the question, Mario? Sorry.
Yeah. So why doesn't the Fed revalue gold to current market price?
Yeah, I mean, I think they probably should. It's not the Fed, but I think the Treasury should.
Yeah.
And then they could give that rather swap that gold with the Fed for real money. I mean, real money, fake money, as we know.
My view is that they don't want people to even talk about gold. They want to make it so it, and if they did revalue it, they would be admitting that the dollar is not really king. So maybe that's why they try to keep it like in the back burner. But one day they might have to. They will allow the market to go, because I think they control the price a lot through the bullion banks. So
that's what's happened in the past. From time to time, they allow the gold price to move to a new higher level, and then try and control it again through the bullion banks. Basically, the bullion banks are allowed to lend out the gold to the gold miners and so forth.
Yeah, I think in 1980, when the dollar was in trouble and Volcker had to raise rates to 20, they let gold go almost to 900. And at one point, the gold that the U.S. held, the value of the gold was over 100% of the Federal Reserve's liabilities. So
wouldn't get close to that. At least it's not a chance.
Yeah. Carlos, thank you for your super chat. With UK defense contractors not getting bank finance in 2023 or insurance, won't UK start CBDCs first in UK defense and PEPs in 2023? I saw a headline about that. I don't know why defense contractors are not getting finance from banks, but I think CBDCs. I mean, Clive, I think you've read the Bitcoin paper from the Bank of England, the Treasury. They're saying that it's a gradual thing, the Bitcoin or CBDC, and that it will probably start running maybe in 2027. So I don't think they're going to have CBDCs very soon. What's your view on that?
I strongly get the impression that the Bank of England's going and the Treasury are going hell for leather to get the CBDC up and running as fast as they possibly can. Yes, they've said at some point this decade, possibly as early as 2027. I've got a feeling they're going for an earlier date at the end of the day. If you look at the Bank of England's job website, you'll see quite a number of jobs on offer for CBDC specialists. So it is clear they're not turning around on this. It's coming. I see all the downsides that could happen. Of course, they've written that they won't have surveillance, they won't control what you can do with the money, they won't, all the negatives we've seen. They say they won't do any of these, but of course that's what they say today. And over time, they might start to bring in some controls. I can imagine, it might start off very simply to start with, you're Jeffrey Epstein, you're using it to finance naughty things with little girls. Well, we're going to have to stop that. So we'll freeze your wallet. And then, you've got a political view we don't like. Well, we'll freeze your wallet too. And who knows where it ends up.
Yeah, it's interesting because Nigel Farage, I think in February, he's on GB News and he was like warning about CBDCs. He said that the government will have ultimate control over you. And I think there was also, it was talk radio. Mike Graham, my wife likes watching that. and he started a petition against CBDCs that you can send to Parliament, and it got hundreds of thousands of signatures. You know, my wife signed, and then the Ofcom, the regulator for the public broadcasting, they came out and said that talk radio has probably broken the rules because they're taking a policy view with CBDCs. So it feels like they know there's opposition to it, like you said, but maybe that's why they're gonna create a crisis, and then they're gonna say, well, you know, we're gonna have to try this new thing.
Yeah, I mean, the CBDC, in my opinion, could well be the precursor to the currency reset. The way that would work is they bring in the CBDC, we get used to it, you're paying your taxes with CBDCs, you're getting a salary in CBDCs, the prices of the shops are in CBDCs. A lot of things, but not everything, is working in the CBDC. And then we have a black swan event, maybe something like what's happening in France, where people are rioting in the streets. Maybe it's a climate accident. Maybe there's a disaster somewhere, or a war starts. And they say, well, look, people are emptying the shops. We want to stop that. So we're going to limit this hoarding by limiting how much money you can have in your CBDC. So you can't take money out of your bank account and put it into your CBDC wallet, which is the only place you can actually spend it now, because the shops don't take anything but CBDCs. You could only have so much per day or per week or per month into your wallet. And it becomes a bit like Nixon's temporary suspension of convertibility. You suddenly find you've got two types of money. You've got the money in your CBDC wallet, which you can actually spend on a day-to-day basis. And you've got the money in your bank, which is a different kind of money, because you can't actually convert more than what they've allowed you to convert into your CBDC wallet, so you can't sell it. And that means your old currency is on a road to zero. And it won't take people very long for them to realize that. I'm guessing that after they put in the temporary restriction, within 3 months, maybe within days, we'll see the old currency worth 70 cents on the dollar or 70 cents on the pound. And after 6 months, probably no more than 20 cents on the pound. But if they do that, that'll be very convenient for the government, because what it means is that the debt will now be, the old debt, national debt, will be denominated in a currency which is not in daily use. Therefore, they can print away ad infinitum the old debt without affecting the economy, with no impact on inflation or anything else. And they can start borrowing in the new CBDC with a debt to GDP ratio in the new CBDC of effectively of zero. Of course, they'll have to bail out a lot of people, like pension funds and old age pensioners and others who've been hard done by this. But if you happen to be rich, or you're a millionaire, or a foreigner, you're not going to get any help.
No, and that's why you shouldn't buy bonds, in my opinion, even maybe 1 month and 3 month bills, because what if it happens in 2 months' time, and you've got all your liquid funds in the old currency. That's why I think it's still the right thing to do, is to stack. And people might say, oh, but you might not be able to use your gold and silver. But I think you can use it outside the system.
You know what you're saying, Barrow. I didn't want to say it as strongly as you, but that's exactly the reason why I won't be buying bonds. I'm not buying bonds, because I don't know that this isn't going to happen next week, next month, or 6 months or a year's time. These black swan events, when they come upon us very, very quickly. And when you want to move a lot of money into something different, let's say you want to move out of bonds into gold, you won't be able to do it, because everybody else will be trying to do the same thing at the same time. And I have personal experience of that from the 2008 banking crisis. I've been a wealth manager for 47 years, but I was a wealth manager back then, and the calls were coming in from clients saying, change all my money into gold. But they wanted physical bars, not for delivery and collection by themselves, but they wanted us to hold the bar in custody for them, so it was not on the bank's balance sheet. And we were I was ringing my foreign exchange desk saying, can you get me 10, 5, whatever number of gold bars the clients wanted to buy? And the answer came back, sorry, but there's a very long waiting list. The refiners can't deliver it, so the clients going to have to take a risk. We can place the order, he can pay the money, but we're not guaranteeing the delivery of gold until we've got it, and that might take 3-4 weeks. Everybody got their gold in the end, but there was an uncomfortable period when people hadn't got the gold, and we weren't undertaking to give it to them because we didn't have it. Until we got it, we couldn't give it to them, and people were worried that the bank, our bank, might go bust before they got their gold.
Yeah.
Well, obviously, that nobody lost any money, but it was a worry.
Someone said here a mercury dime for a loaf of bread. So a mercury dime, I think, would be like a sixpence silver. I've got here a shilling from 1900, which is like a quarter. I'm not sure what you could buy with this in 1900, but it's a nice coin. But
I can tell you, in 1965, a shilling would have bought you 2 bars of chocolate, 2 bars of Cadbury's chocolate. Or a pound would have bought you 40 bars of chocolate. Well, you couldn't buy 1 bar of chocolate with a pound today.
And it was already quite devalued from 1900. So this probably buy quite a lot. But I want to ask you, Yellen, she went to Beijing on Thursday, and I read something that apparently she wasn't invited. She just went there. And I saw some of the clips, like she was meeting the premier of China, and she was really bowing. and then you have all these announcements from Russia about BRICS currency. And her talk is that, they're talking about cooperation, that they shouldn't let like geopolitical tensions affect their economic, trade. But do you think behind the scenes, like they're like maybe begging the Chinese keep buying our bonds, or what's your, just a little bit of fun speculation? I know you're not a fly on the wall over there, but maybe you have a view.
I don't see that the Chinese can own much less treasuries. They have been selling their treasuries and reducing their exposure to the dollar for some years, and it's about as low as it's been for probably as long as I remember. So they are bailing out of the dollar. But now I think they've got about $700 billion or something like that. That's a bit of a top of the head, I guess. I can't see how that can go much lower, because every day dollars are coming in the door, because they're buying, or rather selling, goods to the Americans. And as fast as they get these dollars, they try to get rid of them, and they convert them to gold. They convert them into businesses around the world. So whatever they can find, they're buying. But you've got to. It's like you and I. We've got to have money in our bank, even if we don't trust it. So that's the same with the Chinese. They've got to have a lot of money so they can buy things. So if they find a railway they can buy in Africa, well, they've got to have the money to buy it when they need to. So I think probably they're not going to see the dollar balances go much lower. It's more like petty cash to them.
Yeah. And I think, though, they're definitely not going to increase their holdings if they don't have to, because they've seen what the US can do with it, like vis-a-vis Russia. And I'm sure they're looking at the debt situation in the US that is getting unsustainable.
The situation today is very different from what it was a decade ago. A decade ago, the US government had a definitive plan to balance the budget and start to reduce its debt versus GDP. Now, that plan has been completely turned on its head. There is zero plan to balance the budget. It's only going to get, the deficit will only get bigger every year. They've got a budget going out to 2050, in fact. Okay, it's a bit make-believe when you get as far as that, but certainly there is no possibility in those years of balancing the budget. The debt will get bigger as a percentage of GDP. It will go up to 200% according to the plan. I think it's 197, 198% when in the last year, 2050, compared with 90-something% at the moment. I'm talking about debt held by the public. So that situation today is very different from where it was a decade ago. And that's why foreign governments who've got large holdings of US dollars are no longer seeking to increase their holdings, and they'd rather hold gold. And that's why governments around the world, those who can afford it, are starting to convert their dollars into gold and other things.
And they're also trying to, let's say if Bangladesh wants to deal with Brazil, they're trying to deal, with their own currency as well. And if they have a surplus of Brazil has a surplus of Bangladesh currency after a year, they'll ask Bangladesh for gold. And I think that's why the BRICS, a lot of countries are buying gold.
Well, the alternative currency, the BRICS currency, or whatever it is, that's in a sort of a way, a sort of plan B, because they've seen how the USA has weaponized the dollar by imposing sanctions on various countries around the world when they do things they don't like, or when they have systems which they don't agree with. They can freeze your assets. They can punish those who deal with those countries by threatening to stop you dealing with US banks. And at the moment, the reality of this world is every country in the world needs to have dollars for trade.
Yeah.
But if there's a plan B, some countries won't need to, and therefore they won't have to worry about US sanctions quite so much.
Yeah, it's like you just talked about, China holding dollars like we holding money in the bank. So for other countries, for sovereign countries, it's like they're diversifying, maybe opening another bank, because right now the only bank in town is the dollar. So we've got one more super chat. Thank you, Carlos. He says, PEP, I think PEP is politically exposed persons. Nigel Farage woke banks shut down UK government to CBDC. Nigel, or UK defense contractors without banks. Why would the UK defense contractors be blocked from banking? I don't understand that.
Yeah. So I can answer that one. First of all, what's the definition of a PEP? A PEP is a politically exposed person. That doesn't just include politicians. It includes their wives, their children, their grandchildren. It could potentially include their next door neighbors. It could include their close friends. And it also includes people who are working for organizations which have close ties to the government. So that would include defense contractors. So they, certainly they and their senior employees might be impacted because they're defined as a PEP. So what's the impact of being a PEP? It means that the banks who are dealing with you under the law have to have enhanced due diligence. Now, what does that mean? It means when opening an account, they've got to know everything about the source of your money, and that's true for anybody who's opening an account. You've got to know three main things. How the wealth was acquired, what he's doing today, and how much of it you got. Those are the three things you have to know for a wealthy person, which would include all PEPs in general.
Yeah. I think it's a good thing actually for defense contractors not to be able to do that, because then there's less arms being sold in the world.
But now the trouble with being I agree with you, Mario. It's a good thing in a sense but the trouble with being a PEP is that it's a lot of work for the banks.
Compliance officers, isn't it?
And it's not just the compliance officer; it's the banker themselves. The banker himself is, as I can't speak for every country, but I think it's true in most countries, is legally liable himself personally if he doesn't know the nature and purpose of every transaction going through the account. Now, we're not talking about paying your electricity bill, but if 50,000 or 20,000 goes out of the account, the banker better know what's happening and why it's going out. Otherwise, he's failed in his due diligence job, and he's potentially going to jail and certainly facing a big fine. And that's something which happened to 3 Swiss bankers very, very recently, because they were dealing with the cellist from Russia, who happened to be a good friend of Putin's, and they failed in their due diligence to understand the transactions which were going through the guy's account. Obviously, it turned out to be Putin's money, as it happened. So they've faced very large fines. But the trouble, it's not only the bank who's on the hook. Behind him, you've got the compliance departments of banks who won't trust the bankers to do their job. So they are looking at everything, and they just don't have the manpower to look at this. So I'm not defending them, but the reality is it comes down to what they call a commercial decision.
Yeah.
They're overwhelmed with work trying to monitor all these PEPs. I'm talking about every bank everywhere, and they can't keep up with it. So they're trying to reduce the number of PEPs they're exposed to.
Yeah, and I mean, Switzerland used to be the other way around. There's bank secrecy, and people pretty much, I think banks took deposits. They didn't, and in a way, I think that was kind of right because then you might say, what are you talking about? Well, I think the governments now and the regulators, they want the banks not just to be banks, but to be policemen. And I think that's a bad thing because actually destroying the banks.
Well, it's the good old James Bond days. I can tell you those days of here's my here's the number to my Swiss bank account. Go and help yourself. Those days were very, very long ago, and the regulations have been tightened up. Switzerland, along with all the other countries, have complied with the global rules. There's now even something called the Common Reporting Standard, which means that every bank all around the world is reporting to every single other country about the revenues that their depositors have earned on their bank accounts. The only country which is not complying with that is America, United States of America. So that if you've got some money to hide, that's the place to put it.
Isn't it Delaware and also their tax havens or Montana? Yeah.
Yes. But even the rogue regimes like China, I mean, I don't mean the necessarily rogue regimes, but some people would say they are, like China, North Korea, and Iran, are complying with the Common Reporting Standard, or pretending to anyway.
All right. I think, we will call it a night here. We've gone past 10 o'clock, but it was a really good discussion. And thank you, all the viewers, for your questions. Hopefully we can't get through all the questions, but thanks for your presence here. And Clive, thank you for doing this on your holiday. You're in Portugal. That's nice.
Thank you for having me, Mario. It's a pleasure to talk to you. I hope there wasn't too much lag, because you never know what Wi-Fi is like in hotels.
No, and it was fine. It was just stopped a couple of times, but other than that, it was pretty good. So everyone have a great rest of the weekend and a great week. And we'll talk later.
Thanks to all.